Today, a group of U.S. senators accused Binance of being a hotbed for illegal financial activity. Silvergate discloses uncertainty surrounding the crypto bank's ability to operate for the next 12 months. And Ben McMillan of IDX Digital Assets shares his market outlook as the crypto crackdown continues. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currency prices taking a hit this morning. By noon Eastern, Bitcoin traded below $23,500. Ether traded around $1,600, while Cardano dropped more than 3% to 35 cents. All right, let's talk about those top stories. First, troubled crypto bank Silvergate just disclosed that it's trying to figure out how to survive the next 12 months. In a filing with the SEC, the company delayed financial statements related to the company's 2022 fiscal year, but it also disclosed a $948 million loss for the year. The company said it was, quote, currently in the process of reevaluating its businesses and strategies in light of the business and regulatory challenges it currently faces. The uncertainty around the company's future sent its stock plummeting more than 35% by noon Eastern. Of course, Silvergate customers are also reacting to that disclosure by pulling their business altogether. Coinbase tweeted that it had minimal exposure to Silvergate, but in light of recent events, the company would no longer initiate transfers to or from Silvergate. Instead, CoinDesk reports the crypto exchange will now use Signature Bank. Coinbase isn't alone either. Stablecoin issuer Paxos is also halting transfers to Silvergate, citing those warnings from the company. Last, a bipartisan group of U.S. senators thinks Binance is rife with criminal activity. In a letter addressed to CEO Changpeng Zhao and U.S. Deputy Brian Schroeder, Senators Elizabeth Warren, Chris Van Hollen, and Roger Marshall asked for more information surrounding the exchange's finances. They also said what little information they do have suggests that Binance is a, quote, hotbed of illegal financial activity. The senators also alleged a blatant attempt to dodge the world's financial regulators, and we reached out to Binance, and in a statement, a spokesperson told us that, quote, a lot of misinformation has been spread about the company. The spokesperson added, quote, as a globally regulated exchange, we receive queries from officials in jurisdictions in which we operate on a regular basis, and we always respond in an attempt to both explain our business operations and cooperate with our regulators. Binance.com does not operate in the U.S., nor do we have U.S.-based customers. However, we appreciate the senators' request and will provide information to help them better understand why we remain the most trusted platform with users across the globe. All right, on to our main story. Crypto finished February in the green, outperforming major indexes, with stocks pulling back following a strong performance the month before. So Crypto World's Talia Kaplan spoke with Ben McMillan, the CIO and co-founder of IDX Digital Assets. He breaks down recent crypto price moves and his outlook for the months to come, especially amid the backdrop of increased SEC enforcement action.
Crypto prices had a positive February, with Bitcoin ending the month up nearly 1%, and Ether saw a 2.5% win. That's according to data from Coinmetrics. In comparison, over on Wall Street, after a strong performance in January, stocks pulled back last month, with all three major indices ending with declines. This, as economic data and comments from the Fed caused investors to rethink how long rate hikes will stay elevated. Do you think these macro events are no longer influencing crypto assets that much? I mean, crypto prices have held pretty steady recently, even with last week's hotter than expected inflation data.
No, it's an excellent question. And I do think that the macro is starting to matter a little bit less with crypto. Now, of course, we are in an environment where macro is dominating everything, particularly in the fastest hiking rate cycle that we've seen in kind of modern history. And so it's impossible to escape the macro. But that said, coming into 2023, crypto had sold off so hard, particularly on the back of the FTX collapse, that I think this is just reflecting kind of a right sizing of investor appetite. And I think in many ways it's actually, and it's very bullish that crypto is holding the gains from January. We're not seeing necessarily the same type of weakness that we're seeing across other risk assets.
So last month, we did see a brief sell-off in crypto assets following some crypto enforcement action. That included the New York Department of Financial Services ordering Paxos to stop minting the Binance USD stablecoin, and the SEC's action against Kraken, which led to the crypto exchange announcing it will close its staking operation in the U.S. What do you think about these recent enforcement actions, especially by the SEC? What crypto companies do you think will be affected most by the crackdown?
Yeah, so this has been a long time coming. I mean, the SEC, Gensler has made it very clear that, he was targeting staking services, early last year. So this doesn't come as a huge surprise. I think if anything, we're starting to see, some of the regulatory lack of clarity start to lift. A lot of the institutional investors we talked to last year, there's just so much uncertainty in terms of what was going to be regulated, what wasn't going to be regulated. Now, despite the fact that we've seen so many enforcement actions come, believe it or not, a lot of the big investors I talk to are actually a little bit relieved that it's finally here. We're finally going to know what the state of play is. So I think as it relates to staking in particular, let's also not forget that that's where a lot of kind of mainstream investors really got hurt with crypto. If you look at some of the big well-known staking services like BlockFi or Genesis, a lot of the people that I talk to that have nothing to do with crypto but owned a little piece of it, it was through those services. It wasn't necessarily through a Coinbase wallet. And a lot of Main Street investors really got hurt. And so, the SEC is looking at that and saying, all right, what's the low-hanging fruit that we can, start to regulate to, help Main Street investors? I do think it's going to start to matter, what staking actually is. Brian Armstrong was on CNBC talking about, the way they do it is more of a software as a service type model where it's still your keys, your coins. There's no co-lending of assets. They're not advertising a yield. Meanwhile, a lot of these other providers were kind of guaranteeing a yield, in some cases, commingling assets and actually lending out. So I think it's going to start to get into the nuance of what constitutes staking and what doesn't. But again, this doesn't come as a surprise. And in fact, in many ways, I think it's actually a good thing that it's finally here and investors can start to see what the state of play is going to be.
So Bitcoin's gain in February was much smaller than the nearly 40% win the month before. Ether also experienced the second straight positive month in February, but saw a much smaller gain compared to a more than 30% win in January. Can we expect to see more monthly increases like that in the coming months, or do you expect more modest gains like we saw in February and possibly declines amid the backdrop of a crypto crackdown?
Yeah, I mean, I do think it's going to be a bumpy ride this year. That's one thing we told investors at the beginning of this year is, things from here, the bottom's probably in, but don't expect a smooth ride from here on out. So I wouldn't be the least bit surprised if we see a retesting of, maybe the $20,000 range for Bitcoin. But I think we are at a point now where there's more structural tailwinds. So, is it going to be, huge months like January from here on out? Absolutely not. But I do think we're past the point of kind of maximum investor pain. And I think, all the money that is left has been shaken out and investors are now, had a time to sit back and look and evaluate, Bitcoin in the context of other assets, which is also important to understand. It's no longer, equity returns on a real basis or fixed income returns on a real basis are a lot less interesting to investors, than they were a couple of years ago. And so now all of a sudden, even the most reluctant investors that, for whom crypto wasn't really on the radar are now starting to come to us and ask questions and saying, hey, you know what, maybe we do need to take a look at this, starting to occupy kind of the same mind share as commodities for that matter. So I think all of that leads to some structural tailwinds, but the one thing was the one certainty with crypto is it's always going to be a wild ride.
So now we're in March, and Ethereum's next big upgrade, the Shanghai hard fork, is expected to happen this month. Now, this upgrade will allow validators to withdraw Ether that has been staked since December 2020. Do you think this upgrade will change anything, perhaps lead to more Ethereum investment?
Yeah, I mean, this upgrade in general is going to be, it's part of the continued upgrade and continued improvement of the Ethereum blockchain. So from a structural perspective, it's very good. The big question around Shanghai has always been, once this ETH becomes unlocked, do we see a massive dumping of it on the market? I don't think that's going to be the case. First of all, it is earning a yield. And again, despite the fact that we now have more competitive treasury yields, the crypto community still does like the ability to earn, mid to high single digit yields on staked Ether. You also look at the amount of supply that's locked up, it's about 14%. So it's not nothing, but it's certainly not a huge number. So, a lot of the conversations we've had around the Shanghai update are, do you think we're going to see a sell-off after that? If so, how big? I wouldn't be surprised if, the Ether price responds a little bit, but we're certainly not expecting, a massive sell-off from all this kind of forced selling. And again, it's in the context of, this is part of the continued series of upgrades, which is making Ethereum, that much more of a robust ecosystem with more that can host more development, more scalability, et cetera.
So PitchBook's Robert Lay tells me most of the VC cash in the crypto space will continue to go to infrastructure and Web3 this year. I know you discussed Web3 with me just now, but are you also noticing increased interest in these two areas? What crypto projects would you say are getting the most attention from investors you speak with?
Yeah, so it's very early days, but the Web3 in general, I'll say it's been fascinating to the speed with which kind of, the everyday person has this has popped up on their radar. Again, even investors that we talk to that, crypto is not even necessarily on their radar, they're not evaluating it as an investment. They're coming to us asking about Web3. What is it? How do I get exposure to it? And so it's definitely, and I think that's in large part to, mainstream companies that, aren't crypto adjacent starting to look at Web3. Starbucks has talked about using Web3 for, NFT kind of membership rewards type programs. And so it's definitely here to stay. We actually have a project and part of our, for lack of a better term, our Skunkworks division, which has developed a Web3 wallet to facilitate, certain types of kind of specific use cases, for industries completely unrelated to crypto. And so I think that's potentially one of the most exciting things in blockchain technology or crypto is I think Web3 is going to be what takes it mainstream. And the use cases are almost infinite. I mean, it's one of the beauties about open source technology, and we saw this in the 90s with kind of the open source Linux revolution, is that the development happens it kind of everywhere all at once because it's open source by that very nature. And so you're seeing a lot of really innovative use cases come to market, and I think that's going to accelerate.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.